In 1492, the Spanish real was the world's most trusted currency, backed by New World silver, accepted everywhere from London to Manila. Spain's empire stretched across the globe. Their currency was the reserve asset for international trade. By 1640, the real was worthless. Spain had debased the currency so severely that merchants refused to accept it. The empire collapsed. A currency that dominated for 110 years died in 18 months. In 1720, the Dutch guilder was the world's reserve currency. Amsterdam was the financial capital. The guilder financed trade across Europe and Asia. The Dutch East India Company was the most valuable entity in history. By 1780, the guilder was irrelevant. Britain's pound had replaced it. The Dutch Empire faded. A currency that ruled for 80 years was gone in a generation. In 1914, the British pound sterling was the unquestioned global reserve currency. London controlled world finance. The pound backed 60% of international trade. The empire spanned a quarter of the Earth's land. By 1971, the pound was a minor currency. The dollar had replaced it. Britain was borrowing from the IMF. A currency that dominated for 105 years lost reserve status in 57 years. Now it's 2024. The US dollar has been the world's reserve currency since 1944. 80 years. Every major commodity is priced in dollars. Every central bank holds dollars. The entire global financial system runs on dollars. And the pattern says the dollar is about to die. Because here's what history shows with absolute clarity. Every reserve currency follows the same life cycle. Rise through military and economic dominance. Peak at maximum imperial expansion. Decline through debt accumulation. Collapse through currency debasement. The timeline is consistent. Reserve currencies last 80 to 110 years. Average lifespan, 94 years. The dollar is in year 80. The mechanism is identical. Governments print money to fund wars, maintain empire, and service debt. The currency loses purchasing power. Creditors lose faith. The system collapses. It has happened 4 times in the last 500 years. Same pattern, same timeline, same ending. And we're watching it happen again in real time. Let me show you the 3 historical collapses that reveal the pattern, why the dollar is following the exact same trajectory, and what happens to your wealth when the currency dies. Collapse 1. 1640. Spain and the real's debasement. Death in 1500, Spain was the most powerful nation on earth. The conquistadors had discovered the New World. Silver from Potosi and modern Bolivia flowed into Spanish coffers. Gold from Mexico. Wealth beyond imagination. Spain minted the real, a silver coin that became the world's first truly global currency. Spanish reals were accepted in London, Amsterdam, Istanbul, Beijing. If you wanted to trade internationally, you used reals. This gave Spain immense power. They could buy anything, hire any army, fund any war. The real was trusted because it was silver. The coin itself had intrinsic value. But Spain had a problem. They were fighting constant wars against England, France, the Netherlands, the Ottoman Empire. War in Europe, war in the Americas, war everywhere. Wars are expensive. By 1600, Spain's costs exceeded their silver income. The empire was spending more than it was earning, so Spain started debasing the currency. In 1599, a real contained 3.4 grams of pure silver. By 1620, it contained 2.5 grams. By 1640, it contained 1.7 grams. But Spain kept claiming each coin was worth the same. They reduced the silver content by 50% while insisting the coin's value was unchanged. This is monetary debasement. Reduce the metal content but maintain the face value. It's how governments steal from their citizens without raising taxes. At first it worked. People accepted the debased reals because Spain's empire was still powerful. Merchants assumed Spain would honor the currency. But by 1640, the debasement was too obvious. Foreign merchants started testing the coins. They realized Spanish reals had half the silver they were supposed to. Trust collapsed overnight. Merchants in Amsterdam refused reals. London merchants demanded payment in English pounds or Dutch guilders. Chinese traders rejected Spanish silver. The real, which had been the world's reserve currency for 110 years, became worthless in 18 months, and Spain's empire collapsed with it. Unable to pay soldiers, unable to buy supplies, unable to service debt. By 1650, Spain was a minor power. The empire was finished. Here's the pattern. Spain debased the currency to fund unsustainable spending. It worked temporarily. Then trust broke. The currency died. The empire followed. And the same pattern was about to repeat in the Netherlands. Collapse 2, 1720-1780, the Dutch guilders' debt death. After Spain collapsed, the Dutch Republic rose to dominance. In 1600, the Netherlands was a tiny country. But they had two advantages: naval superiority and financial innovation. The Dutch created the first central bank, the Amsterdam Wissel Bank, in 1609. They invented the stock market. They pioneered bond financing. And they issued the guilder, backed by gold and silver. By 1650, the guilder was the world's reserve currency. Amsterdam replaced Seville as the financial capital. The Dutch East India Company controlled trade with Asia. Dutch merchants financed kings across Europe. The guilder was trusted because it was stable. The Wissel Bank maintained strict gold and silver backing. The Dutch didn't debase their currency like Spain had. But the Netherlands made a different mistake: debt. The Dutch Republic fought 4 wars with England between 1652 and 1784. Each war was financed by bonds. The government borrowed from Dutch citizens and foreign investors, promising to repay with interest. And here's the trap: the debt was denominated in guilders. As long as the Netherlands could print guilders to pay the debt, they could borrow infinitely. At first, this worked brilliantly. The Dutch borrowed cheaply because creditors trusted the guilder. Interest rates were 3 to 4%, the lowest in Europe. But by 1700, Dutch debt was enormous. Debt to GDP exceeded 200%. Interest payments consumed 50% of government revenue. The Netherlands was trapped. They needed to keep borrowing to pay interest on old debt. But creditors were getting nervous. Could the Netherlands actually repay? In 1720, the South Sea bubble burst in England. It triggered a financial panic across Europe. Investors demanded repayment. The Netherlands couldn't meet the demands, so they did what Spain had done. They debased the currency. Not by reducing metal content in coins, but by printing paper guilders far beyond their gold and silver reserves. From 1720 to 1780, the guilder lost 60% of its purchasing power. What cost 100 guilders in 1720 cost 250 guilders in 1780. Foreign creditors realized they'd been defrauded. Debt repaid in debased guilders was a default by another name. Trust in the guilder collapsed. By 1780, the British pound had replaced the guilder as the world's reserve currency. Amsterdam was no longer the financial capital. London was. The Dutch Empire faded. The guilder became a regional currency. A reserve currency that dominated for 80 years died in 60 years of debasement. Here's the pattern. The Netherlands borrowed beyond their ability to repay. They printed money to service debt. The currency debased, trust collapsed, reserve status ended. And Britain was about to repeat the same mistake on an even larger scale. Collapse. 3. 1914-1971, the British pound's 57-year death. In 1815, after defeating Napoleon, Britain was the unquestioned global superpower. The Royal Navy controlled the seas. The British Empire covered a quarter of the Earth's land, and the pound sterling was the world's reserve currency. From 1815 to 1914, the pound was backed by gold. 1 pound could be exchanged for a fixed amount of gold at any time. This made the pound absolutely trustworthy. It was as good as gold itself. Britain used this power to dominate global trade. Commodities were priced in pounds. International debts were denominated in pounds. Central banks held pounds as reserves. The pound financed the Industrial Revolution, built railroads across continents, and funded the expansion of the British Empire. It was the most successful reserve currency in history. Then came World War I. In 1914, Britain entered the war against Germany. The cost was catastrophic. By 1918, Britain had spent the equivalent of $2.4 trillion in today's money. The entire economy was mobilized for war. Britain couldn't pay for the war with taxes, so they borrowed, issued bonds, printed money. And critically, in 1914, Britain suspended gold convertibility. For the first time since 1717, you couldn't exchange pounds for gold. The gold standard was abandoned. This was supposed to be temporary, just for the duration of the war. But Britain never fully returned to the gold standard. They tried to restore it in 1925, but the pound was overvalued. British exports became too expensive. The economy stagnated. In 1931, Britain abandoned gold permanently. The pound became a pure fiat currency, backed by nothing but trust in the British government. And here's what happened. Britain kept printing. They had war debts to service, an empire to maintain, social programs to fund. They couldn't balance the budget, so they printed. From 1914 to 1971, the pound lost 96% of its purchasing power. What cost £1 in 1914 cost £25 in 1971. Foreign governments noticed. After World War II, the United States had the world's largest gold reserves and the strongest economy. In 1944, at Bretton Woods, the world's nations agreed the dollar would replace the pound as the global reserve currency. Britain was finished as a monetary superpower. The pound became a secondary currency. By 1976, Britain was so broke they needed an IMF bailout. A currency that dominated global trade for 105 years lost reserve status in 57 years of debasement and debt. Here's the pattern. Britain suspended gold backing to fight a war, kept printing to service debt and maintain empire. The currency debased for 57 years. Trust collapsed. Reserve status ended. The same pattern as Spain, the same pattern as the Netherlands. Different mechanisms, identical outcome. And now the dollar is following the exact same trajectory. The dollar, 1971-2024. 53 years into the collapse. The dollar became the world's reserve currency at Bretton Woods in 1944. The agreement was simple. The dollar would be backed by gold at $35 per ounce. Other currencies would peg to the dollar. The dollar was as good as gold. This gave America immense power. The world needed dollars for international trade. America could print dollars and buy real goods from other countries. As long as the dollar was convertible to gold, everyone accepted it. But America did exactly what Spain, the Netherlands, and Britain had done. They spent more than they earned. The Vietnam War cost $1 trillion. Social programs expanded. The government ran deficits every year, and to finance the spending, they printed dollars. By 1971, America had printed far more dollars than they had gold to back them. France noticed. Charles de Gaulle started exchanging dollars for gold. Other countries followed. America's gold reserves were draining. Fort Knox was being emptied. So on August 15, 1971, President Nixon did what every reserve currency issuer eventually does. He broke the gold backing, closed the gold window. The dollar became pure fiat currency. Nixon called it temporary. 53 years later, the dollar is still fiat, still backed by nothing but trust in the U.S. government. And for 53 years, America has printed dollars to fund wars, deficits, and debt. From 1971 to 2024, the dollar has lost 87% of its purchasing power. What cost $1 in 1971 costs $7.50 today. U.S. national debt has gone from $398 billion in 1971 to $38 trillion in 2024. That's a 95x increase. The U.S. runs trillion-dollar deficits every year. There's no plan to balance the budget. No intention to pay down debt. Just print more dollars and hope the world keeps accepting them. And here's the critical signal. The world is starting to refuse. China and Russia are trading in yuan and rubles, bypassing the dollar. Saudi Arabia is accepting yuan for oil. BRICS countries are developing an alternative trade currency. Central banks are buying gold at record levels because they don't trust the dollar anymore. The pattern is unmistakable. We're in the late stage of dollar collapse. The same stage Spain was in by 1630. The same stage the Netherlands was in by 1760. The same stage Britain was in by 1960. The three phases of currency, death. Every reserve currency collapse follows three phases. Phase 1, dominance and accumulation, years 150. The currency is backed by gold or silver. The empire is expanding. Trade is growing. The currency is trusted globally. Governments borrow because credit is cheap. Debt accumulates but seems manageable. Spain was here from 1530-1580, the Netherlands from 1650-1700, Britain from 1815 to 1865, the dollar from 1944-1994. Phase 2, denial and debasement, years 50-80. The empire has overextended. Wars are expensive. The government can't raise taxes enough to fund spending, so they debase the currency. Cut silver content, print paper money, suspend gold backing. At first it works. The currency is still accepted out of habit and trust, but purchasing power starts declining. Inflation appears. Debt grows faster. Spain was here from 1580-1640, the Netherlands from 1700-1780, Britain from 1914-1960, the dollar from 1971 to 2024. This is where we are now. Phase 3, crisis and collapse, years 8100. Creditors realize the currency is being debased. They demand repayment in hard assets or alternative currencies. The government can't meet the demands. Panic sets in. The currency loses 50 and 90% of its value in a short period. Hyperinflation or deflation destroys wealth. The empire contracts. A new power with a new currency rises to dominance. Spain collapsed 1640-1650. The Netherlands collapsed 1780-1810. Britain collapsed 1971-1976. The dollar's collapse is coming, based on the historical timeline between 2024 and 2044. Why the pattern is 80-100 years. The life cycle of a reserve currency averages 94 years. Why? Because it takes approximately 3 generations. First generation, years 1 to 30, builds the system, fights the war that establishes dominance, creates the currency backed by hard assets, remembers the cost, and maintains discipline. Second generation, years 30-60, inherits the system, enjoys the benefits, starts taking the reserve currency privilege for granted, begins borrowing and spending more. Discipline weakens. Third generation, years 60-90, has never known anything but reserve currency dominance, assumes it's permanent, borrows recklessly, prints freely. Can't imagine the system ending. Then it ends. The dollar is in the third generation. The people running the system today have only known dollar dominance. They can't conceive of it ending. They think America is different, that the dollar is special. But Spain thought they were different. The Netherlands thought they were different. Britain thought they were different. They were all wrong. What happens when the currency dies? When a reserve currency collapses, 90% of the population loses everything. In Spain, after 1640, the middle class was wiped out. Savings in reales became worthless. Anyone who held Spanish bonds lost everything. Only those who held land, gold, or foreign currency survived. In the Netherlands, after 1780, Dutch merchants who held guilders lost their wealth. The commercial class collapsed. Amsterdam stopped being a financial center. In Britain, after 1971, anyone who held pounds lost 96% of purchasing power over 60 years. Retirees on fixed pensions were destroyed. The British middle class went from wealthy to struggling in 2 generations. When the dollar collapses, the same will happen in America. Anyone holding dollar-denominated assets will lose. Cash, bonds, money market funds, even stocks priced in dollars. If the dollar loses 80% of its value, your stock portfolio might go up 300% in nominal terms but lose 50% in real purchasing power. Only hard assets survive currency collapse. Gold, silver, land, productive businesses, commodities. This isn't theory. This is documented history from 4 separate currency collapses across 500 years. The signals. The collapse is near. Here's how you know we're in the final phase. Debt is unpayable. U.S. debt is $38 trillion. Annual deficits are $2 trillion. Interest payments are $1 trillion per year. There's no mathematical path to repayment. The only option is print more dollars. Foreign creditors are exiting. China has reduced treasury holdings from $1.3 trillion to $775 billion. Japan is selling. BRICS countries are creating alternative payment systems. Gold is being accumulated. Central banks bought 1,037 tons of gold in 2023, the highest level in 55 years. They're converting paper dollars into hard assets before the collapse. The empire is contracting. America is pulling back from global commitments. Can't afford to maintain military presence everywhere. The empire is overextended and exhausted. Inflation is structural. Even with rate hikes, inflation persists because the government can't stop spending. The only way to service debt is print more money. Inflation is baked into the system. These are the exact signals that appeared in Spain by 1630, the Netherlands by 1770, and Britain by 1960. The dollar is on the same path. The truth they won't tell you: every reserve currency dies. Spain's real. The Dutch guilder, the British pound, the dollar will be no different. The pattern is consistent. The timeline is predictable. The mechanism is always the same. Print money to fund unsustainable spending, debase the currency, lose credibility, collapse. We're in year 80 of dollar dominance. The historical average is 94 years. We're in the final phase. And the people who understand this pattern are preparing. Central banks are buying gold. Billionaires are diversifying into hard assets. Countries are building alternative payment systems. While you're told to keep your money in dollar-denominated assets, keep saving in dollars, keep investing in U.S. stocks and bonds. If this changed how you see the dollar, if you finally understand why every currency dies and the dollar is no exception, then you're starting to see what comes next. Subscribe if you want to understand how to position before the collapse. Because the pattern doesn't lie. Currency death is inevitable. The timeline is consistent. And we're running out of time. Spain collapsed in year 110, the Netherlands in year 80, Britain in year 105, the dollar is in year 80. The pattern says it ends soon. And when it does, most people will lose everything because they didn't know the pattern. But now you do.